Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us again. Let's get across what we have seen here on the, international markets, in fact, mostly a positive session ahead of the summit with Presidents Trump and Xi in Beijing today, while sentiment was boosted on Wall Street with the confirmation of Kevin Warsh as new Fed chair, while higher than expected producer price inflation was largely shrugged off by the market. The S&P 500 and Nasdaq resuming their momentum, roundly boosted by AI-related tech shares. Nvidia and Tesla shares, they advanced with the chief executives of both companies, Jensen Huang and Elon Musk, accompanying President Trump to Beijing. Cisco shares surged 15% in after-hours trade after announcing 4,000 job cuts as part of a restructuring and it's shifting investment towards AI while raising its annual revenue forecast. Ford shares recorded their biggest jump in 6 years after Morgan Stanley called the carmaker's energy business and its partnership with Chinese battery giant CATL as underappreciated competitive advantage. Nvidia's corporation, or group I should say, surged after the AI cloud firm reported a nearly eightfold rise in quarterly revenue. EchoStar rose following regulatory approval of the $40 billion sale of wireless spectrum to SpaceX and AT&T, and cryptocurrency firms Coinbase and Strategy tracked Bitcoin and Ethereum lower. We're taking a look at what we're seeing in terms of the US Senate having approved Kevin Warsh as chair of the Federal Reserve, assuming the leadership from Jerome Powell, whose term ends on Friday, but who will remain a Fed governor. It comes at a time of widening inflation pressures beyond the impact of tariffs and the spike in oil prices from the Iran war. So producer prices jumped 6% in April from a year earlier, the fastest pace in 4.5 years. And President Xi and Trump will begin a summit in Beijing today, where on the agenda, trade, Iran, Taiwan, and AI. And corporate leaders, as I mentioned there, in tow, including Jensen Huang and Elon Musk, with trying to resolve those business issues, particularly in China. Nvidia, which has struggled to get regulatory permission to sell its powerful H200 AI chips there. Now, President Trump actually posting on social media, I'll be asking President Xi, a leader, he says, of extraordinary distinction, to open up China so that these brilliant people can work their magic. Now, just checking in on those longer dated US Treasury yields, they've reached their highest level after producer prices rose more than economists expected. The US 2-year was at 4.01%, the 10-year at 4.47%. And Australian 3-year government bond yields close to 4.75, the 10-year at 5.1%. We're just missing the charts at the moment. The US dollar index up slightly on the day, the Aussie climbing to 72.6. Now, just catching up with what we're seeing in terms of commodities, oil prices have eased as investors waited on news out of the Middle East and talks in Beijing. Brent crude futures down 2% to $105 a barrel. Gold has slipped further on renewed inflation concerns, which weighed on expectations for interest rate cuts. Spot gold at around $4,687 an ounce. Copper futures 2% higher to at another record high, in fact, and iron ore up to 113 a ton. Bitcoin has fallen below 80,000 US dollars. All right, well, let's get across what we're seeing on markets at the moment. Joining us now, Ira Epstein from Linen Associates. Ira, hopefully you're there. All right, so look, let's start with that nomination of Kevin Warsh. That has now been confirmed. Interesting time, isn't it? Because this comes off the back of those producer prices. There is pressure, political pressure, to cut rates. What are the prospects? Perhaps the next move is going to be a hike.
Yeah, first of all, forget the pressure to cut rates. That isn't going to happen in this environment. Warsh is one of a number of governors, period. He's the lead boy that is like a coach. He has to whip them into place and try to get them to see the common good for the goal. Well, you can't say with inflation going up as much as it is right now that a rate cut should be on the table. You need something else to happen. I don't know what that is, in fact, because right now I think that the odds of a cut this year, and I said that with you last time, are zilch. I don't think there's going to be a rate cut in 2026. I think it'll get pushed back into 2027. And let's be realistic, there's only 7 months left. If it takes another 3 or 4 months if the war with Iran were to end immediately for oil flow to pick up and then start replenishing things, how do you get a rate cut? It doesn't make sense. So I think you forget that. More important is I think you have to understand this is a pretty big week. We're going to see if the lack of flow now out of Karga Island in Iran means anything. It's been 4 days and they aren't loading tankers. They aren't doing anything, though. That is sitting still. 1.38 million barrels a day of oil would go through that towards China. So China has other sources it can get it from because a lot of Iranian oil was at sea, and that's probably going to be going to China. But as you get through those supplies, what goes next? In addition, you have other countries that have dug into their strategic reserves all over the world. They're going to want to replace their oil at some point. So oil prices going into a state of a deep dive, that's away from the story. That's not realistic. Could you drop from here $20 a barrel? Yes, you could. But there's something else. We're not at the highs that oil made during the first days of the Ukrainian war when it went up to $125 a barrel, or even before that, near 150. So everything seems to be not quite what it is. The press likes to make these stories greater than they are often. If it were so bad, stock market in the U.S. wouldn't be up the way it is. In Europe, it wouldn't be going the way it is. In Asia, it wouldn't be going the way it is. So there's more to this than meets the eye. Yes, it's an inflation shock, but it's one that's manageable in the near term. One other thing, 5% yield on 30-year U.S. government bonds. Haven't seen that in a very long time.
All right, what is that telling you, Ira? And also I note Boston Fed Reserve President Susan Collins saying persistent inflation may prompt an interest rate hike.
Well, they're saying what we're talking about right here. If it keeps going, if you cut the inflation, then you stop a lot of the spending. I saw that we just saw the weekly retail sales in the U.S. They were up 9%. I almost fell out of my chair when I saw that. I haven't seen a figure of 9.6%. We've been running about 6 or 7, which I thought was unbelievably great. And then to see that was a real surprise to me. So when you put it all together, you've got to understand what the Fed members are saying. And they are saying, listen, this is a time of unusual events. We don't know the full impact of what's going on in 2 areas. AI. Got to remember AI. The CapEx spending is insane. Cisco came out after the earnings, after the bell today, and they're up about 15 to 18%. And part of the reason they're up is because they're laying off thousands of people. Now, it sounds terrible when you hear that and the company's going up. Yet when you look at U.S. unemployment, those people are being absorbed elsewhere because their unemployment rate is sitting at the 4.2, 4.3 level, which is historically very low. So we are in a transition. This reminds me, I said this to you before, when the iPhone first came out, AI is that next event. And when I hear the naysayers keep going, no, this can't keep going, it's not that way, they're not going to get their money back, I don't believe that for 1 second. I don't know about you, Andrew. I don't know about all of our viewers out there. How often are you people using AI? I use it every day. Every day. All AI is, remember, we've always had the data. We didn't have chips fast enough to read the data and give us answers almost instantly. Doesn't mean yet that the answers are right, but that'll come too because AI will learn to check itself. What it won't be able to do is beat the market. You watch. You're going to find out that I'm very right on that.
Well, it is a revolution and we're all being swept up in that right now. Ira, now of course AI is also on the agenda just as far as that summit in Beijing is concerned. Ira, how critical is this for the American president given how the war has panned out? Opinion polls are turning against him. He needs a win.
What do we define as a win? He's brought all the titans of American business with him, including Jensen Huang, who wasn't at first coming. This is not the meeting you're going to deal with Taiwan and those other issues. This is the meeting of, hey, buddies, let's get together. We're the 2 big guys. Let's show the world we can do a few things. I doubt that rare earths will get resolved. This will be more the fluff stuff. And then in September or so, there'll be another meeting, and that's the one where really we have to pay more attention, and where for the good of both countries, they have to learn to get together and figure out what they have to do to both protect themselves and expand their economies with each other. You heard what I said, with each other. At the end of the day, they're the major purveyor of goods. We're the major consumer. It doesn't do any good for the two of us not to work together.
Meanwhile, Ira, we talked about oil prices there. What's your view on precious metals at the moment? Obviously, you've been holding that in your portfolio. Overall, how are you seeing that pan out at the moment?
Well, I've been warning here on this show that copper was going to take off. Not gold, not silver. I've said it on each show. I told you that sulfide is a big problem now that it's cut off through the Strait of Hormuz, and 20% of the copper in the world that is produced uses the sulfide to get reclaimed out of the ground. So you're now looking at copper making that move because this is where you're going with it. In addition, you can't tell me that copper is going up because interest rates are falling. They're not. All the countries that we're seeing are talking how they fight inflation by raising interest rates. This is a shortage, my friends. Eventually, you'll see that copper, yes, there'll be other uses that come out, and Corning coming out and joining forces with the AI companies. That's going to be important because you won't need as much copper at some point in time. That isn't today. That's down the road. So right now, copper is number one. I am not friendly to gold right here. I am not a bear. I'm just not friendly to gold because if the war comes back after the Xi meeting with Trump and the U.S. attacks again or Iran's attacking them, each time we see the battlefield, gold goes down. Gold will have its day, and it's around the corner. And I think it'll go dramatically higher, by the way, once the market switches gears and looks at inflation, which we both agree is on the table. But right now, that war scenario keeps a lid on gold. It doesn't seem right because normally you'd think that with war of this type, you'd go higher. But that's not what the fact is.
All right. Thanks so much for joining us on Lynn & Associates.
Thanks for having me.
Let's turn our attention to the local markets. Ahead of the open here, dare I say, another negative session looks to be ahead of us with S&P ASX 200 futures down 0.25%. It has extending that run of losses we've had. Only a couple of days on the up. Certainly over the past 2 to 3 weeks, it has been decidedly negative out there. We'll get across that. More company results coming to us as well, and some updates, particularly from the AGMs. We'll get across that in just a moment. Stay with us for the open.